Hello, 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 everyone. Happy Thursday. Just today and tomorrow to go on this busy week, December 1st, kicking off December. So, how is everyone doing? Busy data out this morning, PCE, jobless claims. We got more Fed speak today. I don't think it's going to matter. Good morning, Jacob. Good morning, Dave. Patrick, good morning. Good morning, Martinez. Are the Bulls going to take yesterday's profits today? Well, they could very well be some profit taking. Good morning, Gary. Rich thinks it's time to roll over. Is that a short-term rollover or a long-term rollover? Have had a substantial rally after yesterday's buying frenzy. So we had the PCE numbers, core PCE coming in line, revised this number was revised up. PCE year over year, again, revised up, prior revised up from 6.2 to 6.3. The actual coming in now 6, so a little contraction there, but these are still very high numbers. Month over month, a slight beat coming in at 0.2 versus 0.3. I forgot the previous I forgot if that was revised or not. I'll have to double check that. Initial jobless claims coming in a little better than forecast. Continuing jobless claims coming in worse than forecast. Personal income coming in bigger than forecast. Personal spending at 0.8 coming in at forecast, but higher than previous. Remember, this number is not inflation adjusted. So, things coming in pretty in line, but people looking for a bigger drop in PCE. This is still very, very elevated, but it's going to be that 50 basis point rate hike for December. Now we have Logan's coming up in just a few minutes and Bowman. Then we have the S&P Global Manufacturing PMI forecast still in contraction, 47.6. I'm really watching to see how much this differs from that number. Same thing with ISM PMI, which is the more important one, coming in 30 minutes after the open, forecast to be in contraction. I'm really watching in relation to 50 to see if it does hold up, and if it pulls back, if it's a miss, how much it misses in relation to that 49.5. But then at this point, if it's a miss, is with the 50 now being the baked-in rate hike, is that better or worse? Who knows? Just got to trade the price action. Then we got bars speaking this afternoon. Don't forget, tomorrow we still have non-farm payrolls. Stock market map, pretty mixed. Bob is now pulling back today after a pretty good run. Costco's down. We had Dollar General, which was a miss on revenue. So that was gapping down. Kroger was a beat, and that was gapping up. Oil still doing strong with the crude rally. Real estate still leading the sectors this morning. Rotating out of consumer defensive, going into consumer cyclical. So, and you can see consumer cyclical so far has been leading for the past week. Fed watch now back up to 80% for that 50 basis point. Fear and greed still solidly at the upper end of greed mode. Hey, George. Oops, I gotta get through this. Oh, by the way, we are in positive gamma territory, so rallies now have a dampening effect. Even pullbacks have a dampening effect. But the gamma flip levels about 40, 48, so 40, 50. And below that, you get back into negative gamma territory. You have a fair amount of gamma right here between that 40, 50, and 4100. So, again, with Dollar General and Kroger, Dollar General was a miss, was on revenue. That's what's right. So, and that was gapping down when a Dollar General misses on revenue in this environment. That's pretty interesting. So, I'll say good morning to George again. Good morning. Now that the SPY is in 409-ish, is that double top off the table. We'll get to the spiders in a second, but we'll just peek in now on the spiders. Yes, this potential double top is off the table. It rallied way too much. Our key support level is now the 200. We return to the 87.5, so ratchet up this to the next major area. My minor targets the upside are 409. 409 is substantial. 402 is key support. And then the next support level is about this 404.35 area. So that's where it stands right now for the spiders. For the S&P, the major support level is back. I'm using a 40.51, 40.50. We got the 200 there and the prior two top breakout area now. As key support, I will be watching today's low. This is not a double, by the way, but this will be a key pivot point. This low is a key pivot point, 40.72. The little area I will start watching for the breakdown is about 40.76, but we get down below 40.72. It's into a massive clear path move, and that's on a 1 hour. So if you're going to fine tune it, you go to the 15-minute. The only real pausing area is in here, the 40.29 to 40.38. The key levels I will be watching besides that little minor 40.39 to 40.38, I'm really focusing on that back to 40. Everything's support is at 40.50. 40.50 is the key short-term support level. Below that, I'm back at 4,008. Then on a major something happens in the world that really gets acceleration to the downside, 39.50. So, pausing air again, no double on the NASDAQ. This is not a double top, but I'm watching about this 12,000, 12,005, 12,000 as the breakdown area into the clear path move. But this is closer. I'm watching back to that 4-hour rotation zone and 11,933 on any pullback move. And then about 11,820 for the key pullbacks. This bigger. This is still valid. We talked about this yesterday afternoon. Still a potential double top. So that's my major line in the sand. Although we're back to this high area, that 62.5 did not close above the 62.5 officially yesterday. So still watching for that potentially today. The next key targets are 12,222 and then 12,368 higher. The Dow support 34,350 area. And then I'm using 34,115 and then 33,850, 860. My next little minor target, we're hitting closing in on the 34,700. We already hit 34,707 and now pulled back a little off of that. And then it's 34,783. Above there, you don't have much until we get to the 35,100 area. The Russell, utilizing yesterday's low and then about this 1879 level. Then below that, we're back to now the support level coming in at 1869. Key resistance 1913. Over to the Qs real quick. Over to the Qs. Yes, technically this is the slop, same as with the NAS, is a very sloppy double top because of this hitch in there, but I will be utilizing those levels. That would need a daily close below 280.57 daily only. The next target is 297.34. The key, I'm going to flip these around too. The key support level, besides having the gap up, so 293.36 and then 292.20. Below 292.20, you don't have much because of these clear path moves until you're back to 289. So those are all those levels. The DAX still, yeah, this is still a little mini double top. Next key level to the upside is 14,790. The key breakdown 14,337 is what I'm utilizing. The notes still, after triggering the bottom pattern and through the, again, multiple tests of this first target area, now closing in on the second major target area, this 114.11. The only thing I'm watching, this is still a little mini, this is valid mini potential double. That's the only thing I'm watching for a potential short-term pullback, and that would be below 113.27 on a closing basis. 113.21.5, 113.19, 113.16 are those levels. Other than that, it's still solidly in the bullish play, and even that little minor pullback just takes it into the prior breakout zone and the 4-hour rotation zone. So that's not a major topping pattern. Dollar index breaking back down, coming back down to test the next harmonic, 104.54. Major support, 104.20 to 104.27. We start getting closes below that, we could have a significant top put in the dollar. However, cycle bottom and very oversold, so won't be chasing that lower at this time. You can see here that was a 4-hour daily cycles rolling over also, and now solidly below that 200. So the 200 is resistance on any rally. And this is where it's getting back to that oversold condition. So Rich asks, potential double bottom in the VIX. Yes, we went over that in yesterday's session. There is still that valid there's actually a mini potential double, a very mini potential double above 21, essentially 21.28, 21.43, 21.58. Doesn't even take it back to yesterday's breakdown zone. And then this is still a daily potential double, which would put me more in a more significant pullback pattern if you got the daily close above 22.63. So that's what I am keeping an eye on there. Hey, Waka Waka, I haven't seen you much. So, a lot of people took him as dovish. I thought he came across a little more dovish than hawkish, but we're still with the silly thing, the 50 basis point, the step down. It's not a pivot; it is a step down. It's just in fuel the rally mode. Still think now I need the pattern to trade, but I still think we're going to get a rug pull at some point. We shall see. It's a little too complacent in full-blown, guaranteed through the end of the year. Just got to buy and go away. Bitcoin, by the way, after that silly show with bank fraud boy, that was absolutely vomit-inducing from my perspective. Watching for the pullback to 116.11. Euro, there is no double. You can see clearly a triple holding the 200. So, and remember, longer term, we now we've closed above the 62.5 way back on Friday the 11th. We should see 106.36 successful little pullback test. No trigger of the double and the rotation back up. So 106.30 is the next target area, which is also a breakdown zone. The pound above the 200, hitting the harmonic area. There's a fair amount of topping pressure right up in here between about 122.50 to 123. So do keep that in mind. 50% retracement of this whole significant down move. What else are we sitting on? Oh, crude. After the aggressive percent B buy closing in now. The double has been confirmed finally, but not yet officially triggered on a daily basis. So that's where I'm watching for the closing today. There was the front run pattern, and now going to see how the close goes. The close would have to be above 82.36. Gold, by the way, huge move up in gold. Huge move up in gold. Taking the potential double top off the table, which was never confirmed, coming up to the very significant level and harmonic. And squarely above the 200. Now, this is the first time it's been back above the 200 since in June. So that is very interesting. This is a pretty key topping area up here. Next major target, though, I'll bump this up. The next minor target is roughly 18.18, then 18.28. 18.18, 18.28 is key resistance. All right. Hey, Christoph. Do I see one-year Treasury bill maintaining near 5% level with nervousness in the market? I don't see nervousness in the markets. I see we're back to the go-go gadget markets. I mean, people I'm talking to, over 90%. It's the no-brainer, guaranteed, done deal, rally through the end of the year. You just got to buy everything. Even on a pullback, you just got to buy. Buy. There's no fear in this market whatsoever. The 1 year is just trading at roughly the terminal rate still. So that's about it. And by the way, the 10-2s, we got that little bounce off this recent low and, almost a double. Now I'm going to watch to see on a return to that, how that holds. But we should be getting closer to a more substantial bottoming formation in the 10-2s. With that, what else do we have? Oh, I got to jump into. We have the Tesla semi-pump event today. We have this little not well-formed inverse head and shoulders, but the targets can be utilized from my perspective. So 198.80, 205.70. I'm really focusing on this 204 to 205 area as key resistance. We're at 197.55 with the gap. So on any market weakness into the open, I'd be watching for the gap fill to 194. Yesterday's close, 194.70. And I already gave the upside targets to that. So, good morning, Ted. You got to pay the bills. The bills don't pay themselves, Waka. Where are we sitting? I can't get to everything. I told you, and we also, yesterday, we're in buy the junk. Let's see the follow through with ARC. Let's see if it can hit. We should hit 37.91 today, then 38.37. Snow, which you did have the gap down yesterday, and now fully Moving up, going to be watching this key point 148.13, a close above there. Could be a nice continued rally in that. Good morning, Anissa. So, can I look at Baidu? Baidu, your key support's back at just in front of 100. Short term, I mean, you're getting a little gap down this morning. I'd just focus on yesterday's low because you start breaking below yesterday's low, you can use the gap harmonics, but there isn't much support. There's minor support coming in at 102.90 roughly, but then it could be a quick trip back to 129. So that's where that sits. Other than that, the key levels for if the rally does continue, the key area is right here, already with the breakdown zone and the 50% harmonic. So 115 area is your key target to the upside. So would not even worry on that pullback to 100. The key breakdown zone would be back at 92. I tend to agree. 2023 will be bloody. Yep, I will be putting out something for the channel members on some dividend things that I'm watching going into next year coming up. I will be putting out something on, and you're not necessarily just looking at the highest paying dividend stocks, because you're also looking at the quality of the dividend paying stocks. And so I will be releasing some things I am looking at. Hey, W Browser, thank you for checking in. So, can you take a look at cost, thinking about taking into summer time frame? Costco. If you're looking for still, did Costco come out with something this morning? Because that's a very hefty gap down, and I did not see anything across the news wire, but I wasn't specifically looking for Costco. There's no, I mean, I'd only get concerned if you start breaking below about 508. 508. That's would be my key level. I'd be watching this 508, 509 level. That's pretty key support, because anything below that takes it back below the 50 and this little breakout zone here. And back below the 200. So pulling back in this area, there's a ton of support back here. By the way, that's not a double top. The breakdown, I'd be watching that 508 level, because if you start breaking down below that, next support isn't back till 483 area, 483 to about 488. So that's where that is sitting right now. Sashi's positioned also for the bigger rug pull. Q1 2023, I think earnings are going to contract more than people think. So, doesn't matter. I need the pattern to trade, though. Everyone, if you haven't become a member of the channel, please consider doing so. I completely agree. All right, I got to jump into the open. Let's just take a quick look at the shorter term. Nothing's really changed. Your minor levels on the S&P going to the open is about 4,095. And then we still have the key area I talked about earlier is 4,075 to 4,070 on any pullback. Remember, we got Fed speak going on right now. We have in 15 minutes, we have the S&P Global Manufacturing PMI, and then 30 minutes, we have ISM Manufacturing PMI. Pay attention. If they come in line, it's not going to, from my perspective, not really going to make the markets. If there's a big beat or miss, you could get some key price action movement off that. So be on your toes for shorter term trading in the next 30 minutes. With that, I will be back after the close, and Bob will be on again today. We'll get his take on PCE, and remember, non-farm payroll tomorrow morning. Another very key data point. Talk to everyone later today. Bye for now.